Awesome people of YouTube, welcome back to another brand new educational video. But before we jump into it real quick, what the clips that you guys just saw in the beginning of this video are taken from my Instagram story. I'm posting my results and a few trades that I take sometimes on my Instagram. So please go follow me on Instagram. Also, you can reach out to me and you can talk to me. That is where I reply to all my followers or all my supporters. So you can go follow me on Instagram. It'll be in the first comment, and it will also be in the link will also be in the description of this video. So you can either check the comments, it's gonna be the first one, or the description. So today we're gonna talk about a Forex strategy that I use in my day-to-day trading almost every time or whenever the opportunity is presented to me. And it's not a strategy, actually, it's a tool that the traders use just as a confirmation. It's a really strong tool, and it's been there since quite a while. It was invented, by the way, it's called a Fibonacci. It's right there, right here. You can see this is in my favorite toolbar, but if you go over here, you can also select it from the tools option over here on the website trading view. It will be over here. It's called the Fib retracement. On MT4, MetaTrader 4 or MetaTrader 5, if you're using it on your computer, it's going to be called, I think, Fibonacci retracement. So over here is just called Fib retracement. So you're going to select this one. No matter what your platform is, it's always going to be called Fibonacci. So look for Fibonacci retracement and an icon that shows lines like this. So what Fibonacci is actually, it was invented by an Italian mathematician called Leonardo Pisano. He worked out a couple of numbers here and there, and he came up with this really strong, really powerful tool that is used by traders to this day and will be used, matter of fact, because of how strong it really is. So I like to think of Fibonacci as, first of all, let me show it to you guys what it looks like. So you have to select 2 points, a highest and the lowest, or you can select it the other way around, from the lowest to the highest. That's it. And these are the numbers or the percentages that you see on the right side. Now, Fibonacci is really nothing more than support and resistance. And what it does is it helps you catch a small, very small retracement or reversal. So this tool is going to help you catch that small reversal that happens in the market. You can call it a retracement, you can call it a reversal, you can call it a pullback. A pullback means when the market is just falling and it does this. This is a pullback. This little movement to the upside against the trend, this right here is called the pullback. So what I like to call it is that it's basically support and resistance, right? Because this is what support and resistance does. Now, am I telling you to trade only based off of Fibonacci retracement? No. Fibonacci retracement is really going to be even better as a tool when you have drawn your support and resistance on your chart. So Fibonacci is just going to give you that little boost of confidence that you need, that is going to tell you that yes, this is going to be a profitable trade. It's not going to go against me. So just like most of my strategies that I've taught on this channel, this also goes along well with a trend, or a trend when it reverses, actually. So for example, now you see that this is a very strong uptrend, right? And if you're like me, you like to trade the reversal and not with the trend, this strategy is really going to be a life changer for you. because I like to trade reverses as well. I don't like to trade with the trend unless I am really feeling a trade. I'm really feeling confident about a trade. If not, I'm just gonna wait for the reversal to happen and I will catch the reversal. Now, you will see that how powerful this strategy is because you don't have to risk your money with it. I mean, you are risking your money, but it's just so powerful that you'll be at a peace of mind that you will know at the back of your head that this is going to be a profitable trade, because we are neither going to be trading, we're neither going to be taking our chances with the trend or with the reversal, because we don't know when the trend is going to be over, right? So what's happening over here? As you can see, this is a resistance because the market reversed dramatically or drastically from here, and this was a support. Previously, this was a support. Now it's broken and you can see that it's been tested as a resistance. Now it's acting as a resistance, but I'm still not sure if this is a false breakout or not. We'll just see with the time. If this comes back up and then falls again, then yes, this will be confirmed as a strong resistance now. Anyways, so now the trend is upwards. What am I gonna do? I'm just gonna wait for the market to fall back down to let me know that the trend has ended. So this reversal from here is gonna let me know that the trend has ended. So what am I gonna do now? Since this is an uptrend, I'm gonna start at the bottom. You can start at the wicks or you can start at the start of a body of a candle. It doesn't really matter. Both the ways you draw Fibonacci is really the right way. There's no wrong way of drawing Fibonacci. So what you want to do is you want to start at the start of an uptrend and take it all the way up to the end of an uptrend. So you start at the bottom, you finish at the top, just with the movement, just like the movement of the uptrend. So if it's confusing to you that where you should start, go with the trend. Always remember that. Go with the trend. So you start at the bottom, you start at the start of the uptrend, and you finish at the top or at the end of an uptrend. Now, you see all these numbers and you don't know what these numbers are. These are just percentages. This is 0%. This is 23.6 if you multiply by 100 because this is a percentage. This is 38.2%. This is 50%. So this is the half of Fibonacci, or half the price, you can say. This is 61.8%, 78.6, and this is 100%. So these numbers are just percentages. So for example, if you are selling over here, you are selling at 23.6% of the price. The price has not completed its 100%. So that's basically it. And the only two percentages that you are going to be trading on, or what are recommended or are the most powerful percentages, are 61.8 and 78.6. Me personally, I only like to trade 61.8. 71.6, I don't trade that much, but it depends on the market conditions. And if I miss a trade on 61.8, then I will take it on 78.6 for a little bit of profit. But 61.8, in my personal experience, is what gives you the most profit. For example, now, what did I say? The market is falling. We are going to catch a small pullback or a small reversal. So as you can see, when the market was falling, it came here. It touched 61.8 right here. This was the first. So it touched right here and you entered over here at 61.8. How much profit did you make? 175 pips almost, or 174 or 170. So just like that, based off of 61.8 percentage, this is the golden number. They call it the golden number or the golden retracement. 61.8 is the most powerful retracement number in whole of Fibonacci. Sometimes 78.6 is even more powerful than 61.8, but in my personal opinion, 61.8 is the best. So I like to use 61.8 only. So as you can see that if you had entered here, you would have made 100. And now this works on any time frame. The smallest time frame that I trade on is the 1 hour charts. But usually I like to trade on the 4 hour, because the bigger the picture, the more clear it becomes to you that what is happening in the market. So 4 hour works the best for me, right? So that also means that this trade is going to be, it's going to take you hours, you know. For example, over here, as you can see, 16 hours, or even in this case, it took only 8 hours, I guess, or 4 hours, because the next candle you can see had already touched over here. This reversed, and then the next candle just touched. So I will say around 8 hours is when you would have made 170 pips just off of one trade. So you really see how easy it is. You don't trade with the uptrend, and you don't take the risk. You just wait for the uptrend to come to an end, and then you wait for the market to reverse as well. So you're not trading over here, you're not trading over here. No, you're being patient. You're being sure that the market is going to touch 61.8 and it's going to reverse. So that's how you take trade with the Fibonacci retracement tool. Now, what about a downtrend, right? Also, let me show you something else real quick. So you start at the wick and you finish at the top of a body, or at the middle of a wick close to the body. It's up to you. Like I said, you can draw from wick to wick, or from the body of the candle to the body of the candle. Wick is, by the way, this line that you see. These are called the candlestick wicks, and the body is actually the candle itself. So you can draw from body to body or from wick to wick. It's really up to you. One more thing. How is this gonna add confirmation to our trade as well? You can see that over here is also a resistance, because the market touched here and reversed, came up here, there was a rejection. Over here there was small rejection, then it broke through, and now it's going to act as a support. So you can also go back in the past and see if this was a strong resistance and a strong support. But the support, not so much. It wasn't such a strong support, but resistance, yes. Over here you can see it was a strong support. So over here, not so much. It got broken because the market was really volatile. This was back in 2019. Over here was a strong resistance. So, you know, as many confirmations as you can add to the trade, the better the trade is going to be. So don't just trade Fibonacci alone. Yes, you can. You absolutely can. There's no wrong in that. There's no denying in that Fibonacci alone is going to be a really powerful, really profitable tool. But is it suggested? Is it recommended? No. Okay. Now there's a downtrend, right? We don't know when the downtrend is going to be over, right? So what are we going to do? We're going to be patient. We're going to be patient. We're going to wait for it. And when the market starts coming back up, right? Now the market is starting to come back up. We're not going to trade. Not here, not here, not here. We're not going to trade. We're just going to wait. And for the downtrend, what I said, you start at the start of a trend and you finish at the end of a trend. Now, for example, let's say the downtrend is over, right? Which I'm not sure, which I don't know. I'm not God. I don't know where the trend is going to go. I cannot predict the future. So I'm just going to be patient, right? So the market, let's say this is the end of a downtrend. The market is going to reverse. It's going to come back up. It's going to touch 61.8. Now this is where I am going to sell and catch that small reversal or pullback or retracement. This is my goal, to catch the small reversal. Now, somebody might ask, okay, this is where you enter at 61.8. Where do you exit? That is a really good question. I will take half my profits at 50% and half my profits at 38.2. 38.2 is also a very strong point. So 61.8, 78.6, and 38.2. These three numbers are really powerful, but 38.2 I will always take as my exit, and 78.6 and 61.8 I will always take as my entry. Okay, I hope that makes sense to everybody. If you're confused, please leave the comments. I will answer them. I always answer the questions. So just watch this video again. It will make sense to you. So once again, I'm going to wait for the market to come back up. Whenever it does, I don't care. I don't care when the trend is over. I don't care how long it takes. I'm going to be patient. I'm going to wait until it touches 61.8, and then I'm going to sell over here because this will now act as a resistance point. So how do I know that this is going to be a good entry point, right? You can see over here 61.8 was kind of a resistance in the past. So the market reversed from here, and from here. You can go back. You can go back and see that it was a strong resistance. Oh my God, look at this. The perfect resistance. So I'm just giving you guys, I just gave you guys such a powerful trade for the future, because the markets are going to open up in a couple of hours. And if in a couple of days the market comes back up, you can take this trade. And if you do, please come back and leave in the comment saying that you took this trade and how much profit you made. So just like you guys, I'm going to be waiting for the market to come back up to this point, and I'm going to take this trade for sure, because it is such a strong resistance over here. The market has reversed from this point in the past as well. So would you like to see more examples? Of course. So I'm going to show you a couple of examples. Now I didn't pick these examples, so I don't really know. I'm not going to be sure, but I'm going to find out with you guys right now. So, okay. So here was a downtrend. You can see here is a downtrend, right? So I'm going to put the Fibonacci here and here at the start of the trend till the end of the trend. And now I'm going to wait for the market to come back up. So this trend is over. When it touches 61.8 is when I am going to enter. So right here, do you guys see it? Let me just zoom in a little bit. Can I do this to make it better? Okay. So the market came really close to 61.8 over here. So if you had entered over here, this was the first touch. So if you had entered over here, you would have made around 100 pips. So you guys can see, and this is, by the way, touching the 38.2. So you enter at 61.8 and you exit at 38.2, 100 pips. So how powerful, guys, how powerful is this strategy, right? Now, an uptrend over here. So what am I going to do? I'm going to place Fibonacci from the start of a trend to the end of a trend right here. And now I'm going to wait for the market to come back down. So what happens? Look at this, guys. The market comes back, touches 61.8. Look at this. Touches 61.8, goes even further than 38.2, but I do not exit. I do not let it run. I just take my profits at 38.2. So if you entered here and you exited at 38.2, almost 70 pips, which is so good. It is. And even if you didn't exit the trade, you could have just let it run. It will come back, maybe stop you out, stop loss hits, and it will continue. But we don't care about that. We care about how much we can get from the market, no matter how many pips. 50 pips and anything more than that is, in my opinion, the best from one single trade. Now, over here, this is a downtrend, a huge downtrend. Remember, the bigger the trend is going to be, the more the profit you're going to get. So this starts over here and ends over here. Now, this is a very big move. So I'm just going to wait for the market to come hit 61.8. it came really close here, and if you didn't enter here, you would have entered here. You would have gone into loss for 30 pips, which is not bad. And I would have placed my stop loss right here above this high. So if the market touches that, I would just get stopped out of the market. But anyways, if you entered here and you exited at 38.2, 125 pips. 125 pips off of one single trade. You can go back. Now, can you apply on these small trends? Of course you can. Of course. Now, for example, this is an uptrend, right? This is an uptrend. You start at the trend, you place it at the end. Now it's going up, you wait for it to come back down. It hits 61.8. Now look at this. Why I do not trade the the smaller movements like this when it's just going sideways. It's because of this. Because if you place your trade over here, 61.8, you're gonna hit your stop loss and you're gonna lose. This is a losing trade right here. But if your stop loss was over here for some reason, which is a lot of pips, yeah, 50, 60 pips, no, I don't recommend that. So that is why I don't trade these choppy situations. I just trade the trend reversal. For example, over here, this was if you start at the bottom, you place at the top, 61.8. Look at this. It came here, touched 61.8, 37 pips. Not a lot, but like I said, whatever the market gives you is what we care about. And the bigger the trend, the bigger the move, the bigger the reward is going to be. Now, on GBP pairs, this gives you so many pips, so much profit. It's insane. But GBP pips also gives you a lot of loss because the market needs to move a little to give you a good number of pips. So I do not recommend trading GBP pairs unless you have a really good experience. So for example, over here, this is an uptrend. From the start of the trend till the end, you wait for 61.8. You wait for 61.8. It didn't touch 38.2 in this case, which is really unfortunate, around 45 pips. So you can just, once you cross 40 pips, is I guess if it's a small trend like this one, you can just take your profits and leave the market. But you can see your USD likes to move sideways a lot, which is why I don't really trade it that much. I trade GBP pairs more because they need to move only a little to give you a decent profit. So I really hope that is really it, guys. I really hope you learned something from this. Again, you can watch this video as many times as you want. It's going to be there for free to everybody, available to everybody on YouTube. And if you can master Fibonacci, which is really easy, some of you might be new to trading Forex and you look at this video and you're going to be like, is it really that simple? Yes, guys, it is that simple. But like I always say in my videos, it is simple and easy once you have the right knowledge. Not knowledge, the right knowledge. So add this little tool to your trading and it's going to change your life. It's going to change your life, and believe me, you're going to be so mind blown that it's really that easy. I just gave you guys a trade for the future over here on Euro USD. So the trend is starting here, ending here. Hopefully, if it continues lower, then this trade is not going to be valid. But I'm going to be looking at this price. If this is the end of the trend and it's going to continue up now or pull back, so this is the price I'm going to be looking for. Now, we'll see if this happens. We'll see. We'll make a little video in the future about this trade and about Fibonacci again, proving how powerful this is. So I might even take some trades in real life and record them using Fibonacci, and I'll show it to you. I'll upload it on YouTube. But please go ahead and follow me on Instagram as well. You guys can talk to me. You guys can ask me questions. Please leave them in the comments below if you understand this. And if you don't, still leave the comments in the description. I mean in the comment section. I'll always answer your questions. And yeah, please watch this video again and again. Practice it on your practice account before you jump in with your real money. And I'm thankful for all your support, all the amazing subscribers, new subscribers. I really am grateful. I appreciate you guys, and I'll see you guys in the next video. Peace.